it started to plummet. From its peak last November to its low on Friday, our markets lost 42%, $750 billion wiped away. And the question no one can answer is how much further this has to go.
Eventually it does hit a bottom, but no one can know when the bottom is until it stops.
That share market, of course, is where much of our superannuation is invested. And for the average Australian in a balanced fund, this crash just cost you around 20% of your super. But unless you absolutely have to cash up, experts say don't tamper with it, it's too late.
For people to be selling out of shares now and moving into cash, I think that what they're doing is they're throwing their money away, essentially.
If you're retired, consider part-time work to top it up. If you're on the verge of retirement, delay.
I think people will have to work longer, and I'm talking about 3 to 5 years longer.
Think long-term. It will bounce back. 2 other tips.
I'm sure you take an active involvement in your home or in your child's education. You need to take an active involvement in your superannuation.
For people whose balances have dropped, it is worth contacting Centrelink and working out whether or not they're entitled to an age pension.
Shareholders too are being told not to panic sell. In fact, the time for buying could be close. Some shares weather hard times.
I believe it'll be the agriculture. I think resources will do quite well.
And the 3 that always survive and thrive through downturns: tobacco, alcohol and gambling. Though it could be a while before we're back at last year's levels.
How long is it going to take to move back up? Yes, it could take another 20 years, could take another 30 years.
Let's hope not. Chris Reason reporting there. With me now is market analyst Craig James. Craig, we just heard a prediction of 20 years or more for the market to recover. For every Aussie whose super is in shares, that's pretty gloomy news. What should we be doing about it?
Well, I think the gloomsters are wrong. It's not going to take 20 years to recover. We saw a bigger crash back in 1987. It was bigger in 1929 as well. And it didn't take 20 years to recover after the 87 share market crash. In fact, if you invested in late October 87 and the share market still had another 13% to fall, by August of the following year, you would have made 20%. So we believe that the share market will start recovering fairly soon. But it's going to take a long time to get up to those record highs that we saw of November of last year. It could take 3, 4, 5 years to get to those sorts of levels.
So you believe the share market's close to the bottom?
But the share market is pretty much close to the bottom. Some of the companies on the Australian share market are trading at bargain basement levels. We've got a price earnings or valuation level of our share market at the cheapest levels in 24 years. Really, some companies just don't justify their share prices at these sorts of levels.
Okay, so stick with your super. Interest rates as well. We saw the Reserve Bank cut official interest rates 1% last week. A real shock. How many more rate cuts to come? Over what period of time?
Well, back in 2001, when the US was in recession, Australian interest rates got to 4.25%. We're currently sitting at 6%, and this 6% level of cash rate is actually still tight monetary policy. So the Reserve Bank's got a fair bit that it can go. We believe that we can get down to around about 4.5%, 5% over the next year or so.
Okay. Big question I keep getting asked. If everything's hunky-dory here, why has the Australian dollar dropped so much?
What investors are worried about overseas is a global recession or global downturn, and therefore you buy less iron ore, less coal, therefore you're buying less of our resources, so less need for the Aussie dollar. But we've got to remember that the soggy Aussie is actually a very good thing. It helped us back in the Asian financial crisis, it helped us back in 2001. A low Australian dollar helps our exporters, helps our farm sector, helps our economy.
Yes or no? Are we headed for recession?
No. Simple answer, no. If there was a chance, 10-20%, but our Australian economy is in great shape.
All right, Craig, thank you for that. Appreciate your time. Still ahead, how your property values will be affected. But next, will your job survive? The answer is coming up on Minding Your Money.
Tonight's Breaking 7 News special, Jamie Dury's Japanese outdoor room has been delayed. You'll see it next Sunday on 7. Will America's